It's now time for business. Kenya Revenue Authority is seeking information from banks to net tax from non-residents operating businesses in the country. Kenya Revenue Authority's Strategy Commissioner Mohamed Omar told the Parliamentary Committee on Delegated Legislation that banks will be required to add financial activities of their non-residents customers in their tax returns in plans to increase tax collections.
The Income Financial Derivatives Regulations 2023 was gazetted in February this year. The regulations, among others, introduced a 15% withholding tax on gains from financial transactions by non-residents. However, banks and some investors have criticized the move to introduce tax on the transaction, arguing that the new tax regime would amount to double taxation. However, the Kenya Revenue Authority says banks will only forward information on financial transactions carried out by non-residents.
So it is for information, and therefore there's a specific line in terms of the returns. No impact on the local companies.
The Kenya Revenue Authority says it will add columns on tax returns to require non-residents to disclose financial activities.
It ought to be a separate, like a subsidiary business, a standalone now business, which has its own accounts. Because if you separate it and you say that it has to be accounted for separately, then it means that unless it is delinked now from the main bank's business.
Now you have been doing it as you do your business. We want to know this is the income from interest and the other activities, and this is the income from financial derivatives. It is a line in the Excel sheet. Doesn't mean that you have to run it differently.
This was to make clear that as you prepare your return, be clear on how much is on derivative, so that we are demanding we withhold. You would not tell us it is wrapped in these other categories.
KRA has assured local investors with joint commercial ventures with non-residents that they will not be subjected to the new tax regime.
B says be treated as a separate source in accordance with Section 15(7) of the Act for a resident person or a permanent establishment in Kenya. Can you kindly explain that?
Business income cannot be taxed because I don't have a physical place in your country. Capital gain cannot be taxed because it is not registered in the asset register of your country. So we ensure that there is no tax avoidance by introducing this provision.
Kenya is the second country in the region to tax financial derivatives after South Africa. Benson Truba reporting for Prime Edition.